Hello, welcome along to FTUK's weekly catch-up live stream. Hope all is well with you. It is Friday, the 24th of January 2025, and we have a new president in the United States. I want to talk about that, how that's going to affect the FX markets in a little bit of detail today. Please, as always, subscribe to our YouTube channel and hit the notification bell, all that kind of stuff as we grow the channel. And as always, you can join our Discord community. Our lovely moderator, Reza, will take care of you over there. That is the best place to find all of the new stuff that is happening at FTUK. So what are we going to talk about today? I want to look really at the FX markets, because they were the first to react on the day of the inauguration, and I think it's a pretty interesting tone for 2025. We're also going to talk in the stream about add-ons as well. If you've never traded a proper account before, they are your little secret sauce as to tailoring your account the way that you actually want it. And so we're going to put a little bit of information out around about that. And also as well, our theme of the month is all about payouts. So we've got a free weekly payout add-on for you today as part of our offer. So let's jump in and talk about the new president. Now, I'm a fundamental trader, as a lot of people will already know. So I love the context and the backstory that we can put around the markets, which helps inform your technical analysis. And I think with the new Trump presidency, it's going to be an interesting time. Obviously, when Donald Trump was made president, the first thing that a lot of them always do is that they create these executive orders, these changes in policy where they either unstitch some of the previous administration's stuff or they bring in some emergency changes. The key ones that we need to understand from Donald Trump's point of view are immigration. There's going to be more controls, and that is where a lot of economists would see Donald Trump as being slightly inflationary in his outlook, because if you control immigration, the lower parts of society, you need to pay people higher up more money to do jobs that immigrants would potentially do at the bottom end. So that in itself it is considered inflationary. So watch out for that type of stuff. Although it is bigger picture. Energy, he's declared a national emergency, and he's obviously going to be putting more focus around creating US oil and gas production. And as part of that, he's going to unwind some of the green agenda that Joe Biden brought in. Trade is going to be a lot of stuff about trade, and I think the interesting thing about the way that Donald Trump tends to work is they tend to be quite aggressive with it and then use it as a tool for negotiation. So you hike up trade, you make things a lot more difficult for people to trade with you, and then you go to the table and you use that as a way for then getting what you want as you row it back down. So it moves the markets initially, but it doesn't tend to be something that sticks because it's always used as a form of negotiation. And finally, the other thing which is relatively new is this external revenue service. That's going to be collecting the new tariffs and the duties and all of that type of stuff as he moves into the first year of the presidency. And it's the word tariffs that are the most important by far. The markets are going to be really super sensitive to this. Now, there's actually some statistics out about exactly what the chances are for tariffs in various different areas of the world. There's a 56% chance of tariffs against China. I thought it would be a lot higher than that. There's also, it's much lower in the EU. They're considered to be the chances of tariffs around 7%, so that's relatively low, but it's still very much on the cards. Now, what he's done instantly is there are new tariffs coming in on the 1st of February for Mexico and also Canada. Now, they're going to be set at 25%, and it's that 25% that gives the market an inkling of how he's starting to position, and that's how you move from a state of uncertainty into a state of certainty. Now, on the day itself of the inauguration, that was Martin Luther King Day, so the equity markets were closed, but the FX markets were open, so we could see the market reaction in the dollar as it was, moving up and down. Overall, the reaction in the dollar was that the dollar fell, and that was really on this idea that the tariffs are coming quickly. They're coming down the pipeline quickly, and he's not wasted no time against Canada and also Mexico. What that means is it means that the tariff story is where you're going to find the most sensitivity in the market. That is absolutely super important, because as soon as you hear anything about tariffs moving one way or the other, or something coming out of left field that no one's considered when it comes to tariffs, then you know that that is going to give us the volatility that we need as traders. So The way to deconstruct this is all really a story about the dollar. You know, if you're an FX trader, then you should always have a view on the dollar. And it's the dollar index, which I think is the starting point for starting to unpick where the key trades are going to be. Now, let's have a look at the chart of it, because I put a bit of information on the chart. Let me bring that up so that everybody can see it. You can see here, I've got the actual day of the inauguration here, and it's this day here, the 20th of January. That is the step down that we saw in the dollar. And what it does from a news tone point of view is it paints this move here to be a buy the rumor, sell the fact kind of story. So from last September, this is buying the rumor of the Trump presidency, and then it happens, and then the market then falls off. That is a classic market dynamic. But here's the thing: that kind of tone in the market is temporary. It doesn't necessarily mean that that it turns this here at the top at these 110.27 is the peak in the dollar index at the moment. It doesn't turn that into a major reversal point, a major turning point in the market. Why? Because essentially this move is not over. So when we get that sensitivity to tariffs coming in, as soon as you get it and there's more stuff coming down the pipeline, the buyers will step into the market. And therefore, basically, this buy the rumor, sell the fact narrative, it just gives us a pullback. So although the actual market on the day did fall off, it doesn't mean that this trend is reversing. So the course for the dollar moving forward is that the buyers will be stepping in, which means that a move back up to these 110 areas at some point in the year is very, very, very likely. So how do you then start to work with this? Well, it's simple. It just looks like a very, very clean, beautiful trend. And once you can find the bottom of that, you basically got a bullish dollar environment, certainly up into the summer, and that is something that you can start to really turn into an edge. Bring your technicals into something like that, and all of a sudden you've got a reason to be long dollar against the yen, short euro against the dollar, or however it is that you want to carve it up. But that dollar index is the start point from that. So we're essentially saying that this is not a major market top in the dollar, and this is going to be some kind of an area of support down here, which we will look for buyers to actually step in. Bring your technicals in there, and then you can snag yourself a really, really nice area to start trading. I think it's going to be important. So how do we now start to look at some of the other markets? Well, what I would do is I actually think that the key trade, if I just bring up my screen again, I actually think the best trade is going to be euro dollar. Classic FX, really. The most traded most traded FX pair in the world. The euro dollar, I think that's where is going to be a key market because of our proximity to parity. Now, this lady on the screen here, Isabel Schnabel, German economist from the ECB, she accepts and understands that the environment for conflict with trade and tariffs between the US and between the US and the European Union is very, very likely. It is going to be happening. It's just a question of when and how aggressive that is. Now, I agree with that. I think those tariffs will come in. Those trade discussions and those conflicts will happen. However, the key point is it's still quite low on the priority list when you take into consideration that in Canada and Mexico it's already happened, and the chances in China are higher than they are in the EU. So that means that from a euro dollar perspective, this is not priced in. And that's a very important point to remember. So the FX markets won't have priced that kind of a tariff move in, which means that the most sensitivity to tariff news, I suspect, is going to come in the euro dollar market when we're talking tariffs being implemented in the European Union. And that means that the euro dollar rate would potentially get hit very hard as the dollar starts to strengthen and the euro starts to weaken as a result of that. Now, it's a fascinating market if you look at it. If I bring up the euro dollar over here, what you've really got to see, you can see it here in front of you. So I've got that yearly close on here at 103.56. That's down here. You can see the way that we've now started to retrace back up this leg. But this is the important point. Excuse me. This is the important point. What you really want to do This is moving very, very quickly into a pullback area where the sellers of euro dollar will start to step in. You've got to pay very, very close attention to this leg here. This leg here is the December leg. And when I say leg, what I mean is the overall move, the overall pullback in the trend, you know, from one move, pull back, and then you make progression from there. That leg there is essentially the December leg into the low of the year so far. So this area up here is going to be absolutely critical. And you see where we're sitting now. First up, look at this here. You can see the inauguration here as the dollar started to weaken off, but also notice as well the cap, the actual price that the market initially ran out of steam on the by the end of that day, 104.35. That's an interesting inflection point, and it gives you a really clean line in the sand where you can connect the fundamentals of the Donald Trump presidency with the actual price action. And we don't get many of those. We look for them from a central banking point of view, but you don't really tend to get many of them that are really hardcore political. So that makes that a pretty important area in my book. But if you look at this December leg here, you've got two very key areas. Obviously, you've got the top of the move here. Let me just put my magnet on. The top of the area there at 106.29, but also this one here. Look at the close of this doji. Dojis are like magnets for price action, particularly when we're looking at a daily time frame or a weekly or even a monthly. They're really, they tend to get attracted to. So I've got a very, as we move into February and we get the volatility around non-farm payrolls and then the ECB and the FOMC, I've got a real close eye on this area. And again, what we would be looking for is you'd be looking for sellers to start to want to actually step into the market. It's really fascinating, which I think gives, out of all of the FX markets you could want to get involved in, I think that the most beautiful looking from a positional point of view, in a way that we can deconstruct the price action, I think euro dollar, it probably has it, is probably top of the pops in my book. We've got this doji area here at 105.53, and then you've got that top there. So then when even if we did get volatility past there, you would be looking for sellers to start stepping in. Now, why is that also important? Because of where we are in relation to parity. You can see it down here. Parity's down here. That is just aching to move back down to that area. So that could be a nice running trade into the summer. It really could, depending on how things map out over the course of the next quarter. But here's the thing. That is also a higher US inflationary kind of a move. Now, you've got Donald Trump in there. You've got a president that is potentially more inflationary, certainly than the last administration. So you've got all the right ingredients. So you can see how we can connect everything together like that and paint out a map. That's not a trade in itself, but it doesn't need to be. It's just your context. And it's that base layer of when you're becoming a professional trader that you need to have in the back of your mind. So when you bring your strategies and you bring your different techniques and your different ways, your technical analysis and stuff, you know which way to maybe starting to favor the market. It's really super important. And finally, just to quickly say, I want to look at the US dollar against the Canadian dollar simply because it's already happened. Yeah, we know that the tariffs are going to be there. We know what they're going to be, and we know when they're going to be as well. So we can watch the dollar against the Canadian dollar very, very closely. Now, the thing that I found that's very interesting, look at the progression of this trend, how strong this trend as the US dollar starts to strengthen. This is a daily time frame. This is from September as well. You can see that buy the rumor, sell the fact. But look at the sell the fact on the inauguration day. Look how contained it is. So look how much US dollar strength we have in this market in comparison to the Canadian dollar weakness. Because obviously, as this chart moves up, the US dollar is getting stronger and the Canadian dollar is getting weaker. It's struggling to get lower. That's what I'm trying to say. That's really interesting. So if you did get a wash down, it puts real emphasis around these key areas of support. I mean, you can keep it quite a bit broad and big picture for now. And you don't know what's going to happen. Nobody knows what's going to happen. But you've got to have some sort of a game plan. So what I would want to do as a technical trader is I'd want to start getting some of those momentum indicators on there. Look at your RSI. Look at the strength of your trend with your ADX or something like that. Look at the volatility in terms of, how that's being changed on a Bollinger Band. Get some of those tools that really help you measure the volatility in market and the strength of a trend. They are going to be super helpful in understanding that. I prefer the euro dollar against the dollar as a market to be trading, but I would definitely want to see how the market reacts on the US dollar against the Canadian dollar, because it's now a known quantity, and you can see on the inauguration day, we struggled. In fact, we couldn't even get below the 142.79 area from that swing low point there from the 6th. We couldn't close under it. That's useful. That's really, really useful context. Fascinating market at the moment. And it's good to see, because that is how we get a picture for the course of the year. Okay, let's move on. Let's talk about add-ons. Add-ons are the lifeblood of a prop trader, because all prop companies, they have the various different accounts, the various different programs, but add-ons give you the flexibility to, rather than just take a very, very strict set of rules, they give you the flexibility to be able to craft your prop account exactly the way you want it. Now, if you've never had an FTUK prop account, you'll find that add-ons are offered by most prop firms, and at FTUK we have a whole different range of them depending on how it is you want to trade. So what are add-ons exactly? Well, think of them as little plugins, extra benefits, extra features, things that you can use, that you can tag onto your prop account that will make the prop account operate in a way that is beneficial to you. And that really is where you start to personalize your prop experience. So it's actually wrong to say that the accounts that a prop firm offers are exactly the same for everyone, because they don't need to be, because you can tailor it exactly as you want it. And what they do is that they offer the trader a huge amount of flexibility in how they want to actually build their prop trading experience. And some of that can be a learning curve, and some of that can be personality driven in terms of who you are as a trader and how you want to work. You'll always find that they're always slightly different in different prop firms, and you'll have to go through and mix and match and observe and do your own research basically on how they want to work. We have a particular way of doing them at FTUK which we think are beneficial to the trader, but basically the way that you select them is by understanding what your priorities are as a trader. What is it you want to do? Do you want to have better trading conditions? Do you want add-ons which basically change the construct of the rules in some way that make it slightly easier for you, or allow you to trade a particular type of strategy? Is your focus maybe all around payouts, how you want to get paid as a trader? Is it that's not as important to you, in the sense that you prefer to keep money in your account so you can build it slowly to give yourself more room? Then that's not as much of an issue. But if you're at the table and you want to take money out very regularly, that could be something that you want to do. So faster payouts can be a thing. What about risk management? Maybe you are the kind of trader who prefers to have a slightly looser, let the market swing a little bit, and having a very, very strict stop loss excuse me, a strict stop loss process and procedure. Maybe that hinders you a little bit. So maybe the risk management is important to you. Or how about volatility? As in, like, maybe you're a trader that you get your trades based on when the market is shifting very quickly. That's how you trade, and therefore bringing in news trading as a component of your trading is important to you. Maybe that is a factor as well. So you can see there's lots of different things. It's not just one thing. It's not just a discount. Yeah, it's not just an extra thing that's plugged in. It depends how you want to trade as a trader. So let's have a look at how we actually work with add-ons at FTUK. We have two particular blends of add-ons depending on whether you're going to go down the instant funding route or whether you're going to go down the evaluation route. If you go down the instant funding route, then the first thing that you can do is you can get faster payouts if that's what you want to do. That makes sense from an instant funding point of view, because you're probably more likely to be a trader that knows what they're doing. They've been through the evaluation process before. They understand their strategy. They just want to execute. So therefore, getting the instant funding and then getting the ability to have a payout faster is probably going to be more important. So it makes sense to be able to offer that. At the moment, we have payouts every 2 weeks, and that add-on brings it down to every week, so you can get the money out much more regularly. Or how about slightly looser risk management policies, if that's the way you want to do, if you're a trader that knows what they're doing and you decide that you don't want to have to work with a stop loss by default. That is a very popular choice for some people as well. Obviously, having risk management is the most important thing as a prop trader, and we would always advocate using the stop loss as being super important. But some people, if they want that flexibility, then that is there if they want them. Or how about if scaling is your ultimate destination? Because at FTUK, we are very, very well known for how good our scaling program is as well. And if you want to hit that top tier level on account, you can unlock that level 7, which is not there by default. You can get that as part of an add-on as well. So you can see you can start to tailor the account the way that you want it, and that is on the instant funding. When it comes to the evaluations as well, they're slightly different. Again, you've got that payout rule as well, so you can get those faster payouts if you want it. But what you also get in the evaluations, if you want to pass, if you want to increase the volatility that you have access to help you pass the account, you have the ability to switch on the news trading, which we don't allow by default on the instant funding model. So if you want to use the volatility in news to help you in your trading, you've got that as an option. You see what I mean? So you can really tailor the account to how you want it. And again, if scaling is the priority for you, you can add in that level 7 as well. So all of a sudden, it turns your prop account into something that is just one set of rule that one size fits all. You've got that ability just to move it how you want. And you say, well, that doesn't make a difference. But if you unlock the level 7, the difference between the level 6 and the level 7 in terms of leverage and also access to capital is astronomical. So it really does make a big difference. So if you think that add-ons are not important, trust me, they really are. And you have to get those at the checkout. And if you want to get hold of one, all you do when you get to the checkout and you set your account, you'll see these tables on the right-hand side. Select the ones that you want, and then away you go. And yes, what we've also got as well, if you head over to in the link in the description, let me just bring up my thing on here. We have got a theme this month. It's all about payouts. We've been putting a lot of content out about payouts as well. And we have got an amazing offer at the moment. This is only, the actual discount is only going to run for the next couple of days as well over the weekend. So you're going to run out of time very quickly. But basically, you can get a 40% discount using the code ADD40. That's on all of our accounts. We're also doing a payout booster, and that is if you buy your account now up until the end of February, when you claim your discount, we will add 5% to your actual payout, which is, I think, is a first for FTUK, which is so it's an absolutely amazing deal. And also as well, you get a weekly payout add-on as well thrown in there as well, because our theme is obviously add-ons as well. So we're giving you one of those add-ons thrown in there as part of this offer. So it really is an outstanding offer for the course of this month. Now, I think that this particular one is going to run out this weekend. Yes, I think it is. So you're only going to get to the end of Sunday when you're going to be able to get a 40% discount using ADD40 at the checkout. So it really is an outstanding deal. It's not going to be there next week. So now really is the time to get involved if you want to get that kind of level of discount. Get the free add-on as well. Get the weekly payout add-on as well, and a boost to your actual overall profit, because it's all about getting paid at the end of the day. So it's good to see. Okay, covered quite a lot there. Really, really good stuff. Yeah, that is it for this week. Weekly catch-up, all done and dusted. Thank you very much for coming and joining us this Friday. Really good to get some good trades on the board and get that context in there with the American presidency. All change at the top, but the dollar is going to be the one to focus on. Thank you very much for joining us. Have a great week ahead in the markets, and we'll see you all next week.